If you're buying or selling a home in Saskatoon, Saskatchewan, or anywhere in Saskatchewan in 2026, this video could literally save you thousands or cost you tens of thousands of dollars. In 2025, we saw prices go up again, even with higher interest rates, and most people completely misunderstood what was actually happening in this market. So today, I'm going to be breaking down what actually happened in 2025, what the December 2025 numbers looked like for the real estate stats, what the market taught us, and the one mistake that buyers and sellers are probably going to be making in 2026 as well if they don't understand these trends. So stick around, because the last section that I'm going to be talking about will tell you exactly how to play and win in this market, whether you're looking to buy, sell, invest, or just watch from the sidelines. Now, before we do get into things, if you're new to this channel, my name is Jack Bouvier. I'm a local real estate agent here in Saskatchewan, and on this channel, my goal is to help you navigate the real estate market and provide you with useful information so you can actually make informed decisions to help you live a more rich life. This video is part of an exclusive collaboration with top real estate YouTubers from across North America, where we're each breaking down what's really happening in our local markets, the stuff that you won't hear on the evening news or read in some generic market report. If you want the inside scoop on what's actually going down in these markets beyond your own backyards, make sure you check out all of the videos linked below. These aren't just random YouTubers, they're people who know their markets inside and out. All right, let's first start by talking about prices in 2025. Well, prices, they steadily climbed throughout 2025, even without a flood of new buyers. That means our inventory is diminishing and it's selling much quicker than we've ever seen. By 2025, with the interest rates still very high, the market is still quite tight. If you're buying or selling a home in Saskatoon, missing these stats will cost you thousands. So firstly, let's talk about inventory. As of late 2025, Saskatoon's active listings were shockingly low, as they typically are in the winter months. In December, there were only 569 active homes available, about 40% below the historical norm. That means as soon as a house hits the market, it doesn't last too long. We've seen average months of inventory hovering around the 2 months of inventory, which means that it's still a seller's market. Properties typically aren't lasting very long. Even though more homes were listed in the springtime 2025, they sold almost immediately, and there wasn't really that continuous refurbish of inventory that our demand was able to keep up with. With relative to sales, we are holding fairly strong. In December, we saw 270 sales, which is pretty much the same compared to last year, and 23% above the 10-year average. In 2025, the total sales ended up roughly on par with 2024. There wasn't any wild swings, but the difference was the prices kept on climbing. The same number of sales, but still a higher price point, and we've been trending upwards, which is just a clear sign that the market is very tight. So speaking about prices, Saskatoon's benchmark home price went up quite a bit. In December 2025, it was about $417,000, which is a slight diminish from November, but still a 6% increase compared to last year. Detached homes are even higher, around the mid 480 benchmark price, with a typical sale price north of $500,000 for those detached homes. Condos are a bargain segment with benchmark prices around the $250,000 range. Now, throughout 2025, all segments rose. The detached values were obviously leading the way, but townhouses also came up in price by 3 to 5%. Condos 6 to 7%. So every category is higher than last year. Even midsummer in 2025, we saw a record benchmark price of $432,000. So this means that the average selling prices kept on climbing even though the inventory didn't grow as much. The sales still kept on pushing those prices higher. With the steady volume, these rising prices made more pressure on the market. Homes are selling above the ask price frequently, and in fact, a growing number of share of sales closed over list price in 2025. This is proof that buyers have to compete pretty hard. The small little year-end dip we saw in the winter months, from 435,000 in the peak of August to 417, is just a normal seasonal cooling. Year over year, we're still 6% higher compared to last year. So in short, the era of the falling prices is over. So in short, the idea of falling prices or a big market crash, I I don't think is going to be happening anytime soon. Yes, seasonal prices diminish a little bit, so if you are looking to buy, winter is a good time to capitalize on the slight dip, but overall, we're still trending upwards. Now, because inventory is so tight, homes tend to not last very long. In summer 2025, the average days on market was about 22 days on market. And by December of this year, it was 37 days on market. So compare that to a balanced market of 90 plus days on market. Buyers are still here, fast and serious. And if you're pricing a home now, you might not last long if you're underpriced, or it'll sell slow as it's overpriced, as it typically does. Although if you are overpricing, typically you'll have to do those price adjustments to meet the actual true market value, what the buyers perceive your property being worth. But now for buyers, this means by having your financing ready and being decisive. But for sellers, it means there is still opportunity in the market, even though it's the winter months. Don't make the classic mistake of trying to over ask because your window is tight. It's not infinite. Buyers aren't stupid, and they still know what the perceivable market value is for your property, and you have to be reasonable within that. Although within the relative market conditions, it is still a tight seller's market. Now, talking about the neighborhood scoop, in a market this tight, location splits are huge. Data shows that some pockets blew past the asking price, such as the inner city core, such as Holliston, Adelaide, Churchill, similar prestige to Nutana, saw an average sales of around 4 to 5% over the ask price, where others were much softer in demand. Places like obviously Pleasant Hill, the Hood, Riversdale, King George, Westmount, Meadow Green, those areas. We often saw sub-asking deals. We don't have every suburb broken down here, but generally desirable established areas like the Nutana, Buena Vista, the Varsity Views, they held their value the best. The strong demand areas, those were the ones that had the fastest growing subdivisions. Some of the other growing subdivisions like Stonebridge, Willow Grove, Rosewood, Kensington also stayed quite busy. Lots of buyers looking for bigger homes and growing communities. So if you wanted specifics, give me a shout and we could certainly break down the nitty-gritty details. But the lesson here is that even within Saskatoon as a whole, it's not just one market. There's still hyper-local trends that matter more than ever because they all have their different growing demands, concerns, pros and cons and everything. Now, who's winning in this market? Well, overall, statistically, the sellers have the upper edge in this market, especially under the $500,000 price point range. Cheap condos and entry-level townhouses are seeing a lot more demand lately. The mid-range detached homes around the $450,000 to $600,000 range also see a strong amount of demand. But once you go past $500,000, $600,000, it does diminish in demand. You have less of those move-up buyers looking for those homes. Those luxury homes, the market does soften a bit. There's just fewer buyers up there. So there's a little bit more negotiating power on the buyer's end. We saw this in 2025. The hot price brand for Saskatoon was roughly in between the $300,000 to $600,000 range. That's where majority of the buyers were buying. Homes routinely got multiple offers in that category, and above that, pricing accurately mattered even more. If you're a first-time buyer, you're looking for a condo or a townhome or a cheaper detached home, it's tough since inventory was relatively low and the demand was crazy. So there are still more options than the detached homes with the condos and townhouses, but still moderate pricing properties in that price range were very competitive. But those ultra low end, small condos, apartments, those were less competitive, but still above long-term norms. We're seeing people that want to start a family, buy a house, as first-time buyers, couples, they want a relatively decent place, 2 bedrooms and up, not those beginner, very low-end condos. If you are a first-time home buyer, you have the toughest position. Really lean on the incentives that you have, like the potential secondary incentive suite or the first time programs, 5% down, and really just be patient. Condos, townhouses should be still some of the easiest entry points, and they're great starter homes. For relocating buyers, Saskatoon is likely going to be cheaper than your Vancouver or your Toronto, and 2026 will offer a much better chance to negotiate in higher end segments. But the bottom line is that you must watch for cash flow, and remember that modest rent control talk won't just build homes. You want to focus on the affordability and build wealth via the equity. The key takeaway from this whole video is that the Saskatoon real estate market, new home prices in Saskatoon and Regina actually rose in 2025 about that 5 to 6% price range, which was against what the national downward trends, what economics are expecting in 2026, we're expecting a little bit of a recovery. In 2026, the Canadian Real Estate Association forecasts as Canadian sales up 7.7% and prices up 3.2% within this upcoming year. With other firms predicting modest gains, interest rates should be holding out steady around current market levels as well. But the big wild card really is supply. If there's more houses that come on the market, that means competition is going to be easing. If not, prices are going to be staying relatively firm. Honestly, I think that 2026, we're going to be seeing a relatively similar market and growth that we've saw in 2025. If, like I said, there's not a whole lot of new inventory that comes on the market, then we're probably going to be seeing the same amount of appreciation, similar and slightly similar amount of competition. Again, if the amount of new inventory does not come to the market. Although with this all being happening, there's lots of other factors, such as what happens with the interest rates and everything else here. Although I do think with our general consensus of a bullish market in Saskatchewan, we should be experiencing still a lot more growth. And I think if you are in that position of trying to time the market, don't do so. Just make sure if you are wanting to get in the market, do so sooner rather than later. It's unpredictable as to what's going to be happening in the future. I think our economy and our market here in this province of Saskatchewan is going to be continuing to be relatively strong. So keep that into consideration, and we'll see what the new year brings. But just to recap 2025, the biggest story really was scarcity. Buyers believed that supply would rise and that new listings will tick up in the spring, which they did, but they were snatched up relatively quickly. The months of inventory hovered around 1 to 2 months of inventory, never really going above that, which indicates that it was pretty much a seller's market the whole year. So even though Saskatchewan did see some political chatter with the rent control potentially, the real game was still down to the fundamentals. There was still fewer supply, fewer choices, and there was lots of demand, a lot more competition. By late 2025, it wasn't just driven by speculation, it was more so driven by scarcity. People thought and believed that prices are going to continue to go up, and so they bought just because they didn't want to have the fear of overpaying in the future. What else happened in 2025? The interest rates peaked, then eased, so 2024's overhang of sideline buyers started creeping back in 2025. However, that didn't really trigger a flood of new sales. It just really did keep the market from stalling. Overall, the sales totaled just a bit below the record levels, even as the inventory stayed relatively low. So 2026 is really all about the rates and the new homes. On rates, the Bank of Canada did signal that it's done hiking, so they're planning on staying at that 2.25% into 2026. So some forecasts say that we might even see potential later cuts in 2026 as inflation does ease. There's going to be lower borrowing costs. We should slowly pull more buyers off the sidelines. That supports a gradual rebound as well. RBC says that we see Canada maybe at a 6 to 7% next year appreciation, which is quite high. On the other hand, with higher household debt and these stubborn affordability issues means that I don't think we're going to surge. Really, the big question is building more homes. Saskatoon's pipeline reports that there's a lot more new home permits that have increased. In 2024, we had 1.13 billion in construction value, but we still have a shortfall since we've seen that in the conference board forecasts. In 2024, there was 2,300 starts, and then in 2025, there was 1,750 starts. So the new inventory coming in 2026 is not likely to erase the shortfall overnight, although with the heavy immigration, we could see a population growth of maybe 3 to 4%. That's kind of what our annual average is, although this does mean that every year that we need houses just to keep up with the thousands of people who are coming here, but we're still not there yet. So forecast in a nutshell, I do think that prices will probably keep inching upwards modestly. A few percent, though, through 2026, I think that sales will tick higher as rates stabilize. So supply still might remain on the tight leash. But if Saskatchewan or the city policies finally boost housing starts, watch for a potential cooling effect. If not, I do think that we're going to be remaining in this seller's market. So if you're a buyer, I think it's still fiercely competitive. Just expect multiple offers on a decent home under $500,000. You can't casually just window shop, get financing lined up, and have your highest bid ready. Know what you can afford. Consider broadening your search area and take heart. Interest rates are nearing the peak and likely falling as well. So a wise buy today may pay off later. And 2026 could actually see a few more homes and a little bit more negotiating room depending on what happens. But for now, assume that you're still going to be in the seller's market. And for sellers, this is your environment with a caveat. Since homes that are priced right and they're well staged and well marketed, they are going to sell fairly quick, often at or above the list price. But don't be ego pricing too high thinking that your house is worth more than it is. Even though 2026 might be more of a balanced market than 2025, we're not going to be talking a free fall. Historically, low inventory means that you can take advantage now, but spring 2026 could be a great time to list because we may see slightly more buyers active as rates potentially ease. But remember that the strong market fundamentals with the job growth, the immigration support, all those factors accumulate together and help our economy. Finished very strong, tight inventory, still rising prices, a few surprises, and it sets us up for another year where the main variable is supply. Unless a wave of new listings arrives, competition and upward pressure on prices are likely going to be continuing in 2026. So buyers, be proactive. Sellers, pick your price and your agent well, market it well. And investors, be strategic and work with the right investor focus agent. If all this got your brain kind of buzzing, it did with me too. I already had 2 cups of coffee before I recorded this. Don't go at it alone. I want to help out and feel free to reach out. I want to be there to navigate through these numbers in this dynamic market to help you make a smart move, an informed decision, and build a rich life through the real estate decisions that you make. I want to help you plan for the next steps before the market shifts again. So if you have any questions about what happened in 2025 or what you can expect in 2026, or just if you're looking for any advice, guidance whatsoever, I'd be more than happy to help out. Feel free to hit that like, subscribe button. All my contact information is also in the description below too, and you're welcome to book in a call if you have any questions. Look forward to connecting with you.